AI bellwether Nvidia reporting fourth quarter earnings and revenue. It topped analyst expectations. Sales growing 78% year over year. And the company gave solid revenue guidance for the current quarter. Revenue from sales to data centers also coming in above expectations, though I should mention the gross margin guidance is a bit light, focusing this year. A lot of the focus this year is going to be on how quickly Nvidia can ship its next generation Blackwell AI processors, especially in light of a recent report now that's claiming of some overheating issues with those chips. Nvidia CEO Jensen Huang addressing Blackwell in a special interview with John Fort.
It was logical to be concerned about the ramping of Blackwell, but we have now successfully ramped Blackwell. The other concern that people had was the Hopper Blackwell transition. It might create a pocket, an air pocket, and I think we're now well successfully behind the air pocket. We're going to have a good quarter this quarter. We had a great quarter. We're going to have a good quarter next quarter.
He also addressed a Chinese AI developer, DeepSeek, whose emergence on the world stage last month caused a scare for Nvidia investors.
DeepSeek was fantastic. It was fantastic because it open sourced the reasoning model that's absolutely world class. Just about every AI developer in the world today has either incorporated R1 using, it's called distillation, distilled from R1, or using techniques that have been open sourced out of R1 so that their models could be a lot more capable. Across the world, AI has become better as a result of the last several months.
Despite fears that models like DeepSeek might reduce demand for Nvidia's top-of-the-line chips, others in the chip industry think Nvidia could actually see more demand. Joining us right now for more on all this, Nvidia's fourth quarter, Chris Caso is here, Wolfe Research senior analyst. You kind of thought this was going to happen, right?
Yeah, I mean, you know, for all the angst and worry kind of coming into the report, we get in about in line, you know, a little better than where expectations were. And it's all about, as Jensen said, the transition from the old generation to the new generation Blackwell. And it's not the beat that we've come to be accustomed with Nvidia, but it appears that's the reason why. And, you know, the stock rebounded after DeepSeek. And I think the reason why that was the case is because we heard from all the cloud providers about where the CapEx is this year. And that's really, you know, where the focus is right now. So those CapEx numbers were revised higher by almost 20% since the beginning of the year. So you've kind of got that push and pull. And, you know, there's legitimate concerns about how far this can go, you know, how much, you know, spending can increase as you go into 26. But the money's going to be spent this year.
Well, so that's what I was going to ask. We know the money's going to be spent this year. That's clearly built into the stock. But I would argue what's built into the stock is not just the money being spent this year, but the money being spent 2, 3, 4, 5 years out. I mean, that if you don't believe the money is being spent 2, 3, 4 years out, the price is not where it is.
Clearly. And I'd say where the valuation of the stock is right now, it's about 23, 24 times our next year number. The valuation is not exceptional. You know, the worry that AI is in some bubble, you know, we've all been there for the tech bubble in the 90s. This is not the same valuations we're seeing right now. But going forward, I mean, I think Nvidia made a pretty good case on the earnings call last night. They're going to have the developer conference coming up next month where they're going to make the argument for why this continues to grow. One of the things that I thought was interesting, and Jensen brought it up in the spot you had about DeepSeek, is the move to reasoning models where the AI actually thinks itself. It doesn't have the answer itself, but it can figure it out using a couple of steps. You know, what they said was that actually uses 10 times the compute power for inference for actually running the models. And it does appear that that's going to be one of the drivers as well.
But let me ask you a different question. I understand the economics for Nvidia now. Mm-hmm. It is less clear that we all understand the economics for the people who are paying them. Yep. Right? Meaning everybody who's paying them effectively is losing an extraordinary money doing this.
Right.
And so at some point, the math has to add up for them for it to add up for Nvidia.
Exactly. And it gets to the return on the massive investment that's being made right now. And that's a point that's not abundantly clear. Who's really making money on this? And there's certain parts where you're getting a lot of efficiency. But that's the question that has to be answered.
I mean, Jensen Huang will say that it will broaden out, that you'll have more people who are using and more companies that are spending. Do you believe that?
I do. And again, that conference in March, it's sort of like a rock concert. They have a stadium where they fill people. You know, they come up with different testimonies. So it's a big event. But, you know, my view is, unfortunately, I do think there's some parallels here to what happened in the tech bubble, in the internet bubble in the 90s. And the reason is because we're throwing a whole lot of spaghetti up against the wall right now. And some of that spaghetti is not going to stick. And the reason why we created a bubble last time is because you had investment going after things that didn't have a return on investment. And Nvidia doesn't know which one of their customers are going to be successful and which ones aren't. Right. And that's eventually a problem. But I don't think we're there yet.
Do you have a price target, or where?
$180, yeah.
Okay, that's a 6-month or 12-month?
It's a 12-month price target. And again,
it's a big gain from here.
It's a lot of it's a big gain, and even that just only it factors in some deceleration of revenue growth, about in the 30s next year. So and that's what's compelling about Nvidia as an investment right now, because you're not seeing a bubble valuation, seeing a really reasonable valuation on a company that's been growing like crazy.